Welcome back to Financial Independence 101. This is Mike. Today I want to talk to you about why is the stock market crashing. A lot of people are curious. Why is this happening? Thursday and Friday were big down days. We haven't seen days like that consecutively in a while, and then 1,000 points down on the Dow. Now, I'm going to talk about this and really discuss this. Is this like '08? It's more like '08 than the dot-com crash in 2000. Is it like 1929? Well, there are certain similarities, but there will be some differences from 1929. But is this something that's going to see a sucker rally? Is it going to go straight down? We know the markets don't go straight down. But we're going to get into this. I found this article that really sums up all of the things that are going on, but really not a whole lot is different than what's been going on the last 2 years for the most part. It's just the fact that we have a few other circumstances involved, and there's a lot of question going on. Consumer run out of money, because they've been running out of money for a couple of years. We'll talk about this. I'll analyze this. We'll talk about it and more coming up. So what's happening that's got everybody freaked out? I got to show this. This is really just the last 3 trading days for the most part. And you can see where we left off at Friday, and then we had the nice little enjoyable weekend, and then coming back where on the 5th it literally opened way lower. And I look at the Dow. I think the Dow is a good indicator, even though all of the markets have swapped out companies over the years and the decades, so it's really kind of hard to tell. But we're in the here and the now, and for it to lose 1,000 points in a day, it's really only 2.6%. We've seen 5% dips in the past, and you could see in the future, we could see $2,000 and $3,000 drops in one day if serious events happen. I mean, really, there's nothing different for the most part that's happened in the past week than what's happened over the past 2 years. Consumers running out of money. We'll talk about all this. And companies filing bankruptcies. We have bankruptcies. I actually have a video I'm in the works on the bankruptcies, but it just seems to be getting worse and worse and worse as time goes by. But largely the market's ignored all the bad news. All of a sudden it's listening to it for a reason. Let's get into this article. There's been a sudden violent shift in global markets on Monday, and the Dow Jones fell 1,000 points. And it's funny because of the fact that a lot of people act like they didn't see it coming. But we all saw Jeff Bezos sold $2.8 billion worth of his stock back in January, February, and then just a month and a half ago, and I should have made a video on that, but I haven't, but he sold $5 billion because he saw this coming. See, all of the big wigs, the billionaires, the 1%ers, they see it coming. All the CEOs of all the companies see it, and they've been coming out. CEOs been coming out talking about this, and they see it coming. And they have to report when they sell theirs. Like, they're selling theirs for whatever reason, but when they sell their stocks, it's very public. All right, we've got this. At the moment, the odds of recession have highly risen dramatically. Now, technically, if you look at technicals, we're in the 9th quarter, meaning 2 years and into the next quarter of full-on depression. Because even though there are some quarters that they say are up in GDP, they're technically down because they're up less than the inflation and less than the amount of money that we're spending on these fake wars that are going on. And I don't know, people get mad and say it's a fake war. They're real wars, but we are only spending the money so that we can see some sort of an economic recovery in a way, and there's no recovery what's going on right now. Goldman Sachs had calculated, and economists, that we're going to see a recession. We're knee-deep in a depression. It's not gonna see a recession. The thing is that they're slick and they could change the numbers, look at it different than we used to look at them in the 80s. And with all of that, they try to say they're putting lipstick on a pig. This economy is a pig. Okay, so markets are deep in the red, and all the major U.S. indexes went into a sharp downturn on Monday. The VIX, the Wall Street's fear gauge reached a level of unseen since the early 2020 pandemic. Bitcoin fell by 18%. Japanese Nikkei fell 12%. The NASDAQ fell 3.4%, falling deeper into correction. Now, a lot of this was triggered by Japan. Japan having a huge fall, and I think they're going to get into that a little bit more later in this. So instead of really talking about it now, I'll talk about it. But they talk about Nvidia falling, and the other thing is that we see Warren Buffett. Warren Buffett sold half of his stake, or the vast majority of his stake in Apple. Simply profit sharing. And you got to really look at what Warren Buffett's doing. Check it out. This man runs Berkshire Hathaway, which is a company that literally is just more or less an investment fund, but it's a stock. It's traded with a ticker symbol, and the thing is that it's like, I don't even know how much it is per share, but it is. He sold so much stock that he's sitting on, or his company is sitting on, $277 billion in cash. Do you realize that at 5% interest that he gets in the money market, if that's where it's sitting or how he's holding it, that's $14 billion a year just in dividends. That's mind-blowing. That's mind-blowing that he can sit here and just make $14 billion a year in dividends in Berkshire Hathaway. The smart money gets out first and then watches all the fools lose their money up. People are going to get suckered in with a sucker rally. You think Warren Buffett's going to throw all his money in for a sucker rally? No, he's not. He knows the sucker rally's coming. But you got the Bezos, you got Warren Buffett. I bet you if you look, Elon Musk selling some of his, I'm sure you could see that. I'm sure that it's going on with Bill Gates. All those bigwigs, they know what's going on. The elites know what's going on. Unemployment. So this is another catalyst for the market going down. But here's the thing. Unemployment, this isn't anything new. It's an unexpected rise, 4.3%. But see, they've been manipulating these numbers all along. They're saying it's only 3% unemployment or some ridiculously low number because they're counting somebody that works 5 jobs as 5 employed people. You got 5 people holding a job. It's one person working 5 jobs to not even make ends meet with all these different Uber Eats and Uber apps and stuff. So it's a manipulation of this. So they've run out of people like that. They've counted everything they can. And so now, of course, it's just going to go back up. And that 4.3, that's not real number because they don't count people not looking for a job. There's a whole lot. It's probably closer to 20, 22%. And in real terms, the way they looked at the unemployment rate back in 1929 during the Depression era, which it was 25%. Again, another clip here of heightened recession fears. And I really hate this verbiage because they act like we all know, every economist knows we're so deep in a recession that it should be classified as depression, but the thing is that no one's going to come out and say it. Here's why your media is not going to come out and say this. Here's why CNBC, I actually watched some CNBC today, and everybody was on there trying to act like, oh, it's just a blip down, it's going to come right back, and we're looking forward to a price target of it's something's at 4,300. We have a 5,200 price target by next April, and I'm like, are you out of your mind? What are you smoking, dude? But this is where it really mirrors 2008. You're going to see a lot of people trying to talk it up as if it's not as big of a deal. We're not as deep into a recession, depression as we are, and that, but in 2025, this stock's going to go from 43 to 52, or these indexes are going to go up another 10% during this time frame. I don't see that, but of course, I don't give investment advice. Wall Street thinks the Federal Reserve screwed up. Now, there's a lot of people saying that they believe that interest rates are held too high too long. I don't think they were high enough. We have not beat inflation. It is not. We didn't beat inflation, and we didn't beat Medicare. Anyway, they're going to start cutting rates in September. And I already made a video talking about that, but they've already put the word out there that they expect to. But if the Federal Reserve comes out and they do an emergency rate cut, then that is basically like throwing up a white flag and we give up, we've lost. Because if they do that, that's signaling that things are so bad that they can't wait till September, that the whole system is unraveling. The whole system's unraveling. And that, I think, an emergency rate cut will do 2 things. It'll have a slight boost in the market, and then it'll have a crash, or like a big crash, because clearer heads will prevail, and they'll know that an emergency rate cut means we're in deep trouble. Which, I mean, we are on deep trouble. We're in very deep trouble when it comes to the economy and the markets. Before I go into this anymore, I want everybody, full disclosure, I am 98% out of the stock market myself. Like, I followed Warren Buffett. I literally don't have hardly any money in the market, and the only stuff I have in there is it was supposed to be bonds. It was converted through a bail-in from Obama administration, And yeah, I got screwed on that. So there's not much money left in that 27,000. So I just watch it and see what it does. And I'm curious. It'll probably just disintegrate and no longer be on my balance sheet, but whatever. Okay, so Japan no longer wants to be the world's source of cheap money. Now, what was going on is Japan was loaning out money for like 1.25%, and then people were putting that money to work in the U.S. market. And so that's been going on for a while, and they've decided they're not doing it. So they're starting to raise their interest rates. So Japan's raising interest rates at a time that the rest of the world's looking at lowering interest rates. And so that started to cause a problem because people were getting calls on their debts from Japan. And so they're not going to have a cheap money alternative to Japan, which I don't know why. There's a lot of these currency traders that do this stuff. This is a lot of, you got to understand there's a lot of shady stuff that's going on out there. But it makes sense on paper. Probably not the greatest idea for an investment alternative, but Japan no longer wants to do that, so they're upping their rates, and that is one of the problems that we saw over the weekend, which led to this Monday situation. One thing I do like about this article is they're waiting. People are waiting for the next domino to fall. It's really a good point here because, in all reality, the things that happened to cause 1,000 point drop in the Dow, it's not like anything a whole lot different than last month, 3 months ago, 8 months ago, 6 months ago. The only thing is, it seems like the government and all of these other reporting, they're allowing more negative news to come through instead of filtering it. Instead of trying to be more shady with these numbers than they've been lately, they're actually putting out numbers closer to reality. And I don't even trust hardly any of the numbers that are coming out, but to let them look a tad bit worse when we know it's really bad. We know it's really bad. The thing is, they've been telling us on the news, and they come out and say how we have a strong economy and all this stuff is so good, when the average consumer is tapped out. When the average consumer is tapped out, then they're not buying. And when they're not buying, companies don't have the sales, so they lay off, they cut costs, which is a vicious cycle that keeps happening over and over and over, to the point to where we have less jobs, then less people spending, so cut more jobs, less people spending, cut more jobs, and that's what happens when you're in a depressionary cycle. So what's the net? I've been through this for decades. I watch it. It's a bit of a fun obsession of mine. I want to say that we could see a couple more down days, but we're going to see a sucker rally in here. And then people are going to get sucked back into this. People, the average person that doesn't pay a whole lot of attention to it, and they're going to put more good money after bad, and then when it really falls, when there's a true catalyst that they call a black swan event, then yes, it's going to be a problem. There's also the warring that's going on, Iran attacking Israel and trying to actually threaten another strike on them. There's a lot more stuff going on over there than I really want to get into in this video. But that's another threat. War is another threat. And they say war is good for the economy. Not in this situation. And I really hate that mentality. And I really hope we kind of extract ourselves from these wars. But we're going to see a sucker rally. We're going to see turbulence in the market. But ultimately, we're going to see $1,000, $3,000 down days eventually. And it's going to be too late if you're not out. But I'm not giving anyone investment advice. I'm just telling you what I've done. I've extracted myself 98% from the market. If you do the same thing, that's up to you. I'm not giving anybody advice. I'm just explaining what's happening. And let me know what you think in the comments below. Like, subscribe. Financial Independence out.